In 1450, the Portuguese real was the world's reserve currency. It dominated global trade for 80 years, then it collapsed. In 1640, the Dutch guilder became the reserve currency. It ruled for 80 years, then it collapsed. In 1815, the British pound took over. It lasted 105 years. Then it collapsed. 4 times in history, 4 different reserve currencies, and every single one followed the exact same 7-stage death sequence. And right now, in 2025, the US dollar is in stage 5, the stage where collapse becomes inevitable. This isn't speculation. This is pattern recognition, mathematical certainty. And once you see how it works, you'll understand why the dollar's dominance is already over, even though most people think it's permanent. Let me show you the 7 stages, how they played out across 600 years of history, and why the dollar is following the script exactly. Before we go through the 7 stages, you need to understand what a reserve currency actually is. Not just a strong currency, the currency that other nations hold in their central bank reserves. The currency used to price global commodities like oil and gold. The currency that international trade is denominated in. When you're the reserve currency, every country needs your money. To buy oil, they need your currency. To settle trade imbalances, they need your currency. To hold safe assets, they need your bonds. This creates what's called exorbitant privilege. You can print money and export it to buy real goods. Other countries have to produce goods to earn your currency. You can run endless trade deficits because foreign nations need to accumulate your currency for reserves. Being the reserve currency is the ultimate economic weapon. It's why empires fight to achieve it, and why they collapse when they lose it. And it always ends the same way. 7 stages. Let me show you how. The first stage is military dominance and trade route control. Every reserve currency begins the same way, with overwhelming military power that controls critical trade routes. Not just having a strong military, controlling the pathways that global commerce flows through. In the 1450s, Portugal achieved something unprecedented. They mastered oceanic navigation. Portuguese sailors rounded the Cape of Good Hope in 1488, opening a sea route to Asia that bypassed Ottoman-controlled land routes. And they militarized this advantage. Portuguese warships dominated the Indian Ocean, the South China Sea, and the Atlantic. They established fortified trading posts at strategic choke points. Goa, Malacca, Macau, Mozambique. These weren't just ports. They were armed fortresses where Portuguese cannons controlled who could trade and on what terms. This military control made the Portuguese real the currency that mattered. Merchants needed reals to conduct trade in Portuguese waters. It became the currency of international commerce because it was backed by military force. The Dutch followed the same pattern in the 1600s. The Dutch East India Company had its own army and navy. At its peak, 40 warships and 20,000 soldiers. They conquered Portuguese trading posts, seized control of spice routes, and established Amsterdam as the center of global trade. Dutch ships dominated the Baltic, the Atlantic, and the Indian Ocean. The guilder became the global currency because Dutch military power made it impossible to trade without it. Britain in the 1800s perfected this model. At its peak, the Royal Navy had more warships than the next 5 nations combined. The British controlled the Suez Canal, Gibraltar, Singapore, the Straits of Malacca. Every critical choke point for global trade was British-controlled. The pound sterling became the global currency because British naval power made international trade dependent on it. The United States achieved this position after World War II. The U.S. Navy dominates every ocean. 11 aircraft carrier battle groups, more than the rest of the world combined. The U.S. controls, or has bases, near every critical trade choke point. Hormuz, Malacca, Suez, Panama. This isn't about defending America. It's about controlling global commerce. The dollar became the reserve currency because U.S. military power made it impossible for international trade to function without American approval. This is stage 1. Military dominance over trade routes. The dollar achieved this in 1945 and maintains it today. Check. The second stage is massive trade surplus and the accumulation of global wealth. Once you control trade routes, you start accumulating wealth from the rest of the world through advantageous exchange. Portugal in the 1500s ran massive trade surpluses. They bought spices and silk from Asia using gold and silver, but sold European goods at enormous markups. The balance of trade flowed toward Lisbon. Portuguese ships returned heavy with Asian goods. that sold for 10 times what they paid. This surplus built Lisbon into one of the wealthiest cities in Europe. The crown's revenues from trade were so large they funded the entire government. The Dutch in the 1600s ran even larger surpluses. Amsterdam became the warehouse of the world. Goods from Asia, the Americas, and Africa all flowed through Amsterdam. The Dutch bought low in one market, sold high in another, and captured the spread. The trade surplus was so enormous that Amsterdam's merchants were richer than many European kings. Britain in the 1800s ran the largest trade surplus in history up to that point. They exported manufactured goods, textiles, steel, machinery to the world. They imported raw materials at prices set by British buyers. The surplus built Britain into the wealthiest nation on earth. London's financial district handled more capital than the rest of Europe combined. The United States had the most dramatic trade surplus from 1945 to 1970. After World War II, America was the only major industrial power with intact infrastructure. The U.S. exported machinery, automobiles, steel, and consumer goods to the world. The trade surplus was so large that dollars flooded into foreign central banks. U.S. gold reserves swelled. Fort Knox held over 20,000 tons of gold by the 1950s, more than the rest of the world combined. This is stage 2, massive trade surpluses and the accumulation of global wealth. The dollar achieved this from 1945 to 1970, but here's where the pattern begins to shift. The third stage is reserve currency status formalized. At some point, the world officially adopts your currency as the reserve. This is the peak, the moment of maximum power, but it's also the beginning of the end. For Portugal, this happened in the early 1500s. European nations and Asian merchants officially recognized the real as the primary currency for international transactions. For the Dutch, it happened in the mid-1600s. The guilder became the currency of choice for international contracts. Even the British East India Company used guilders because Amsterdam's financial markets were the most liquid in the world. For Britain, it happened at the Congress of Vienna in 1815 after the Napoleonic Wars. The pound sterling was explicitly recognized as the global standard. The gold standard, which most nations adopted, was effectively a pound standard because Britain controlled the rules. For the United States, it happened at Bretton Woods in 1944. 44 nations met in New Hampshire and formally agreed to make the dollar the world's reserve currency. Other currencies would peg to the dollar. The dollar would peg to gold at $35 per ounce. The IMF and World Bank were created to manage this system, but here's what nobody tells you. This is the peak. Once you're the reserve currency, the world needs your currency more than they need your goods. So you stop producing and start importing. The trade surplus reverses into a deficit. This is called the Triffin dilemma. For the world to have enough dollars for reserves and trade, the US must run trade deficits. But running endless deficits undermines the currency. You can't be both the reserve currency and maintain a strong trade balance. It's mathematically impossible. So every reserve currency, once it reaches stage 3, begins the slide towards stage 4. Stage 4 is deficit spending and living beyond means, the reversal. The reserve currency nation stops producing wealth and starts consuming it. Portugal entered this stage in the mid-1500s. The trade surplus disappeared. Instead of exporting goods, Portugal was importing everything: grain, textiles, manufactured goods. They paid for this with gold and silver from Brazil. But they weren't producing wealth. They were spending accumulated wealth. The Portuguese crown's spending exploded on palaces, churches, military expenses. The gold wasn't infinite, and they weren't building anything productive. They were consuming. The Dutch in the 1700s followed the same path. After a century of trade surpluses, they became net importers. Amsterdam's wealth made its citizens comfortable. Dutch investment shifted from trade and production to finance. They became bankers to Europe. This generates returns, but it's passive income, not productive growth. The trade balance reversed. Britain in the early 1900s ran trade deficits. They imported food, raw materials, and manufactured goods. They paid for this with returns on overseas investments. British manufacturing declined. Factories were closing. The trade deficit grew every year, financed by liquidating the past. The United States entered stage 4 in 1971. That's when the trade surplus permanently reversed. By the 1980s, the deficit was growing rapidly. By the 2000s, the US was running the largest trade deficit in history, $800 billion annually. The US imports far more than it exports. Consumer goods, electronics, automobiles, everything from abroad. How is this financed? By exporting dollars, printing currency and exchanging it for real goods. This works only because the dollar is the reserve currency. But this is living beyond means, consuming more than you produce, and it's the same pattern that preceded every previous reserve currency collapse. Stage 5 is currency debasement and money printing. When deficits become unsustainable, when you can't borrow enough to finance spending, you debase the currency. You print money. Portugal did this in the 1550s. Facing deficits, the Portuguese crown began debasing the real. They reduced silver content in coins, issued more currency than they had metal to back. Prices exploded. Merchants began refusing reals or demanding more. The currency's purchasing power eroded. By the 1570s, the real was losing credibility. The Dutch did this in the 1700s. The guilder had been backed by conservative monetary policy. But by the mid-1700s, the Dutch government was borrowing heavily. When borrowing became too expensive, they began inflating the currency. The guilder's value declined. By the 1780s, it was no longer the preferred currency for international trade. Britain debased the pound through 2 world wars. World War I forced Britain to print money and abandoned the gold standard temporarily. World War II forced them off gold permanently. Britain printed money to rebuild. The pound devalued repeatedly. In 1949 and 1967. Each devaluation eroded international confidence. By the 1970s, the pound was no longer a reserve currency. The United States entered Stage 5 in 2008. The financial crisis forced the Federal Reserve to print money on a scale never seen before. Quantitative easing, $3.5 trillion created from 2008 to 2014. Then COVID hit. 7 trillion more printed from 2020 to 2022. The money supply expanded faster than any time in American history outside wartime. This is currency debasement, and the effect is the same. The dollar's purchasing power declines. Inflation surged. In 2021 and 2022, inflation hit levels not seen in 40 years. This is Stage 5. Currency debasement through money printing. And once this stage begins, Stage 6 follows quickly. Stage 6 is loss of confidence and the search for alternatives. This is when the world starts looking for exits, when trust in the reserve currency erodes and nations begin shifting reserves to alternatives. Portugal lost confidence in the 1570s and 1580s. International merchants began demanding payment in Spanish silver instead of Portuguese reals. Trade contracts shifted to other currencies. By 1580, when Spain annexed Portugal, the real was already functionally dead. The Dutch guilder lost confidence through the 1700s. European powers began holding more reserves in other currencies. By the 1780s, Amsterdam was no longer the financial center. London had taken that position. The guilder was still used regionally, but not for major international transactions. The British pound lost confidence rapidly after World War II. In 1949, Britain devalued the pound by 30%. International holders lost almost a third of their value overnight. Confidence collapsed. Nations began shifting reserves from pounds to dollars. By 1960, the pound's share of global reserves had fallen from over 60% in 1945 to less than 20%. The transition took 15 years. The US dollar is in the early stages of Stage 6 right now. The signs are everywhere. China and Russia began reducing dollar reserves in the 2010s. They've been buying gold instead. China's official gold reserves have more than doubled since 2008. Russia liquidated nearly all its US Treasury holdings after 2014 sanctions. The BRICS nations have been discussing alternatives. In 2023, they announced plans for a BRICS currency. Saudi Arabia, which has priced oil in dollars since 1974, the foundation of the petrodollar system, began accepting yuan for oil sales to China in 2023. This breaks a 50-year precedent. Central banks globally are diversifying reserves. The dollar's share of global reserves has fallen from 72% in 2000 to 58% in 2024. That's a 14 percentage point decline, representing trillions shifted out of dollar assets. This is Stage 6. The world searching for alternatives, not because they hate America, because they see the pattern. Stage 7 is replacement and collapse. This is when a new currency rises to replace the old. The world simply stops using the old currency and starts using the new. The Portuguese real was replaced by the Spanish silver peso in the late 1500s. Spain had conquered vast silver mines in the Americas. Spanish silver coins became the preferred currency because they were abundant and backed by ongoing production. The real couldn't compete. The transition happened over 2 decades. The Dutch guilder was replaced by the British pound in the late 1700s and early 1800s. Britain's industrial revolution and naval dominance made the pound the obvious successor. London's markets became deeper than Amsterdam's. The transition took about 30 years. By 1815, the pound was the undisputed standard. The British pound was replaced by the US dollar from 1945 to 1960. The transition was formalized at Bretton Woods but took years to complete. Britain was bankrupt after World War II. The US held most of the world's gold and had the only intact industrial base. The pound collapsed in a series of devaluations. By 1967, the dollar had fully replaced it. So what replaces the dollar? That's the question. And the answer isn't clear yet because we're in stage 6, not stage 7. But history gives us clues. The replacement comes from the nation with military dominance, trade surplus, and productive capacity. Right now, that's not any single nation. China has production but doesn't control trade routes militarily. The yuan isn't freely convertible. The euro is fragmented. Gold is increasing in appeal but can't scale to handle trillions in daily transactions. The most likely scenario is a messy transition, a period of multipolar currency competition. Several regional currencies used in different trade blocs. The dollar in the Americas, the euro in Europe, the yuan in Asia. This wouldn't be clean. It would be volatile and economically painful, but it's how transitions happen when there's no clear successor. The pattern is clear. 4 reserve currencies, 4 collapses, same 7-stage sequence. Military dominance, trade surplus, formalized status, deficit spending, currency debasement, loss of confidence, replacement. The Portuguese real lasted 80 years. The Dutch guilder lasted 80 years. The British pound lasted 105 years. The US dollar achieved reserve status in 1944. That's 81 years ago. We're at the average lifespan, and we're in stage 5, moving into stage 6. The pattern says stage 7 comes next. Maybe we're different. Maybe we'll break the pattern. But Portugal thought they were eternal. The Dutch thought they were unshakable. Britain thought the sun would never set on their empire. And they were all wrong. The pattern doesn't care about exceptionalism. It cares about mathematics. And the mathematics say the dollar's reserve status is ending. 4 currencies collapsed. Same pattern, same sequence. The dollar is in stage 5. If this changed how you see the dollar, the global economy, and what's coming, subscribe. Because when stage 6 accelerates, when the alternatives emerge, you'll want to understand what's happening and why. The pattern is clear, the timeline is evident, and the answers aren't hiding in the future. They're written in 600 years of history.